Well, hello everyone. It is Thursday, the 24th of October, 2024. I am Delbridge, Benchmark Realty, Murfreesboro, Tennessee, and I have, I think, a pretty good show lined up. I'll try to keep it short. You know, if you have a few long ones, you probably need to have a few short ones to balance all out to hit that make that mean value theory work out, that everything goes toward the mean. The extremes, everything always goes towards the extreme. So we've got a good show. I'll see you right after this. If you like this content, please go to CallDelToSell.com, find the tab that says on YouTube, click it, and it'll open up a page of QR codes. There you can use a smartphone to scan and get to the YouTube page, or you can just mouse over and click it on a PC. There you'll be able to subscribe to this little button over here and click the notification bell so that YouTube will notify you when each Friday's blog has been uploaded. Thank you. I think rather than trying to get too deep into stuff today, I think we'll just look at a single source that gives you a lot of variety of looking up stuff for yourself, because I saw some headlines this week. I reposted one of them that came out. We had the existing home sales come out. We've also had today, I think it was earlier today being a Thursday, we had the new home sales figures come out. And I think I'll just take you straight to a website where you can work on this yourself so that you can start to see that never, anytime someone says either extreme, everything's horrible, 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 or great, 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 the reality is most likely somewhere in between, and how you can help yourself without getting locked into sort of a loop or fall for the clickbait. Let's go look at some data. All right, where we are right now is Trading Economics. They have a pretty good website of lots of things macroeconomic. And of course, this is the main page. You don't see it up here because I've already shrunk the screen a little bit to get a bigger size text. But what we will see here, if we go full screen, we will see this box for economy. We'll see this box for crypto, bonds, stocks, indices, forex, and commodities here, right here. And we look like we're a fairly red day on Thursday at 2:30 in the PM approximate. But if we go up to this bar right up here and click this, we see that we have markets. If we want to talk market activity, we also have, we can look at indicators as well. Oil, if you want to check out crude oil prices, where gasoline is going. So those are going to be commodity products for the most part, but indexes do show other things as well, such as the leading economic indicator that we saw come out this week. You know, nothing exciting really happened there despite big headlines. Either way, it's just not that big a deal. Month to month, we don't see normally tremendous changes unless there's been like some sort of revision type thing. But if we go back to that center screen there again, we look at forecasts, solutions, apps about markets, that type of thing. Let's look at markets. We can look at crypto. I don't believe in crypto because it's like money that doesn't really exist. Bonds, stocks, currencies, that type of thing. Let's go on up a little higher to, let's see, indicators. That's what we want right here. Now we're looking at interest rate, inflation. We can look at some of those, GDP, all the way down. But I want to open up the more indicators so that I give you this big screen right here. And we have main indicators: money, government, consumer, taxes, housing, trade, labor. So let's look at some of the stuff in housing. There's a few of these right here. You know, one of the things that we constantly hear about is building permits. Now, we saw something, I think, yesterday or the day before, which was the existing home sales went to a 14-year low. And so that looked terrible. And then we hear that new homes, new construction was up. So how does that work out? Well, new construction is a smaller point. So without knowing what the exact balance of that is, because I haven't looked it up in a long time, you're probably going to have quite a bit of existing construction. Even if it's not for sale today, it may need to come to sale at some point in time. And so the existing is probably something we should pay more attention to, or weight a headline on existing more so than new construction. The other thing is, we're still stuck in the mindset that if along the lines during the big peak, during the post-COVID, when everybody had the fear of missing out, where the shortage of supplies and people weren't putting stuff on the market because they were afraid of the virus and all that kind of stuff, we ended up with a lot of bidding wars, especially in our area, stuff going for overprice. And that overvalue, that over market price that people were paying, a lot of that was coming from people escaping the big blue cities where real estate was already nearly unaffordable, and when they sold theirs, they had a wad of cash, and so they could afford to buy something, say in our area of Tennessee, Middle Tennessee, and still have cash left over so they could outbid our locals. And that was, you know, a kind of an ugly thing that we dealt with for a while. But those prices are there and they're in the system, and that leads to that inflation that we captured as that little bit hit, the big skyrocketed thing that we had about 2 years into this administration when the inflation really hit. Government likes inflation. It causes inflammation of my brain and tongue, and I can't speak right today, but they love it because they're going to get theirs, because inflation on the property value just leads to more dollars on your assessment, the amount of property tax you have to pay in. And so they're happy if things go up, plus, you know, the paying off debt with cheaper dollars and all that. But it's something you can't go cray-cray over, because then we end up not being able to afford our food and our gas and the other stuff that's driving the cost up. It's a hurtful thing. So let's look at what building permits. This is going to be obviously a leading indicator because we haven't built yet. So let's see what our trend is on building permits. Well, let's look at the United States, and we're down here in the U's, so let's look at United States. And we see that building permits, yeah, they're down. So if I wanted to clickbait you, I might reference it to August, and so we had 1.5 thousand, and here we only have 1.43 thousand, you see. But the graph makes it look more dramatic than it actually is. And really, we have a little bit of uncertainty. I think that's what most of this is, uncertainty about the mortgage market and rates, because we're starting to go closer toward that September rate cut everyone was anticipating. And yet before the rate cut, when it was so high, look, we were still building lots more houses, 1.56, still quite a bit of starts there. So now I want to look at, because I kind of alluded to it or I mentioned it before, I don't know if I alluded or mentioned, but we kind of brought it up, the concept of clickbait and how different news organizations, whether they're right or left leaning, you cannot ignore those things, because what you're looking at is what kind of intrinsic bias is that website putting. So rather than go directly to a lot of them, because some of them will tell you that you're in a rain and a flood, and they'll tell you we've got an increase in rainfall, above normal. Grass grows with rain, flower grows with rain. Other people say no, flash flood exists and it's all going to be washed away. And between two extremes is always something in the middle. And that's what we just need. Why can't you just tell me how much it rained? Is this more or less rain than we've normally had in the past? Let's look at that with some economic data. Well, we're right here in the building permits we just had. So let's look at one of them. And let's see, United States existing home sales. Well, I told you there was a headline, the clickbait said it's fallen to more than 14 years. Well, we do see a negative trend in existing home sales. We can't deny that. And we'll look at this, 3.84 thousand homes, okay? That's a million. That would make it into a million, I guess, if you have thousands, that's 6 zeros there. So 3.84 is 3.84 million. We looked at it before, 3.88. Well, that's not really significant drop. It's not really a big change from August to September. Same thing, 3.96. We're not really seeing any big news right here. Yes, it may have very well broken a 14-year low. But what does that really mean in the grand scheme as far as the trends or the most changing of data. Because we go back and look at this, we see that in October we had 3.85. Let me zoom in on that, make it go full screen. 3.85, and we're at 3.84. So we're just about where we were of October of last year. So October would have had to have been a slow month, but yet 14 years, this may have just broken that last limit. Let's not lose our mind. But we are on a downward trend of existing home sales. Well, let's look what new home sales are. Well, they're actually going up, right? Where were we in October? Well, we're 673,000. See, that's thousands, that's not millions. It's not a 673K or 6.73K thousand, which would make it to the million. So we're down here 673. So that's not nearly as big a chunk of the home sales in new home versus the others. Now this is United States new home sales. Thousands of units right there. Now where are we today? 738,000. So we are increasing. We are going up on the new home sales are selling more, even though there's many fewer units being transacted because they're brand new, they haven't existed, then we looked at the other. But two different headlines. Existing home sales tumbled to lowest level in 14 years, and yet when we look at the data, it's marginally less than it was in October of the previous year. That's so, what does that mean? The clickbait is what I'm trying to get you to not fall for on the publication, the various websites who want to spin it positive or spin it negative. What does the data say? Well, we've been nearly this level just October of last year, so it's not really all that far away, is it? So is that a seasonal effect? We can go back and look at that. But now let's look at pricing. All right, let's take a look at this. United States existing home sales prices. Well, we're seeing that we look like we're head down. This is kind of showing a little bit of that cyclic nature, I think. We're headed down October, November, December, right, as we go into January, because that's the coldest time. Obviously, we're not going to get as much traffic driving in the colder, grayer weather. Things don't look as pretty as they do when all of the bushes and the yards have been manicured prior to a sale. And then we see that we speed up to about summer, and we begin to come back down. So the fact that we're having sales prices come down a little bit, I think may be an effect, in this case, very much of the cyclical nature. Well, let's take it past, let's go to a 5-year trend and see what it looks like. Well, gosh almighty, we have a cyclical nature in our pricing. That if you want to pay more, you wait till the summer when things are green and more people are out and about. Also, if you want to sell, you might get a higher price, but you're also going to have to compete with most likely more demand during those times of the year. So you may end up with multi-contracts to have to feed through, which is not a bad thing, but it is what it is. We see that. Let's go to the peak. The peak is in June. Where is the peak here? June. What a coinky-dink. What about now? Where's our peak here? June. What do you bet that this is going to be a June as well? So all we've shown is that pricing is also cyclic, and if you're working with somebody and they're listing your home, you need to take that into consideration. You really do, because it's going to have an effect on things. Now, let's go back and look at those existing homes that we were looking at before and take it to a 5-year period. Are we going to see the same effect of just total sales of the prices ramping up with a good sinusoidal type of look? Let's see. Well, there we are. Well, gosh, this looks kind of weird and flaky right now. Well, what did we have back in 2020? Well, we had the COVID disruption. We had the unconstitutional shutdowns and scared everybody half to death and stressing people out emotionally. And then we had the rebound. And for a while, for about 2 years, it took about 2 years for the inflation to kick in and then for the Fed to act. And then after the Fed has acted, we've seen those go down, because it's not that we don't have people who want to buy a house. The actual people in the demand is much lower, not because we have less people with less desire who want to buy a house, but because there are less people who are not just willing to buy a home, but are capable of buying a home. And only the ones who are capable of buying a home actually count as demand. Those who just want one, they don't count. Not because they're not valid human beings, but because for market demand, they're not a player. They're not in the number of people that you might be able to pitch your property to. Well, we can also go look at the new, and see how they look over the same period of time to see if we have something marketably different. Well, we see the same shutdown in the effect, and then everybody got to have one, fear of missing out. But we see that the new slowed down just a little bit more. We didn't see that second parallel hump as high as we did when we were back over here. This is existing homes. There's going to be a lot more of them, and so there's just going to affect how your demand works. So I know I haven't shown you a lot. I've just shown you 3 graphs, but I just have to tell you, be really careful about where you get your information, and you're not being political if you take in consideration the reality of who's feeding you the information, who is spoon feeding you the type of thing that really is to get you to click and read that article. Yes, home sales may be at a 14-year low for existing homes, but we see it's really where we were like October of the previous year. So it's not as big of a deal. And now we see that we had the cyclic nature, so that's not a big deal. It's just we've maybe peaked down just a little bit more than we were a year ago. So it's not really big news there. And that's what I wanted to show you. So you've got the website, you can play with it, you can do your own research, you can de-propaganda your head yourself. So let's wrap this up. Hello, I'm Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, CallDelToSell. That's 1 L and Del, no spaces. Watch the demo on Real Scout, and then call me and we'll set up your exclusive ad-free account today. Well, let's look at our numbers like we always do. These are just really 3 data points. One of them is calculated from the other 2. The other 2 are read right out of the system that I have, the Real Scout system. So if we look at for the week of 10/17/24 last Thursday, because it was a Thursday if I remember, we had 24,198 in the opportunities, and that had decreased a little bit over the previous period. We had 4179 in the under contract still showing. That had increased a little bit over the preceding period, and the integer ratio between those 2 numbers, just simple fraction, 17% had not changed from the previous period. This week, 10/24/24, another Thursday, we have 24,761 in the opportunities. That went up a little bit. We see 4099 in the under contract still showing. They came down a little bit, and the ratio between them remains steady at 17%. So there we are. We're in good shape. You see what I was getting at. I hope that that's visible. Either which way, we're seeing a little bit more, in my opinion, my observation, a little bit more moderation in the existing home sales. They're slowing down because there's price still a little bit too high for the market, else we would be selling them, right? So they must be a little bit overpriced at where people are still trying to take that equity out or in the form of a sale. But the government, they tax you on a period that has already gone past on the assessment, and then they put the rate in on it, so the inflation doesn't hurt them like it maybe you and I would do. So that's it. That's the show. Hey, appreciate you hanging with me. Let me know if a Thursday posting is better than a Friday posting, and we'll see you next week.